Okay, just thought I'd do a quick stocking focus on Gore Games Workshop. So this one obviously went through our screens. We saw it on the breakout screens. We saw it on the pullback screens. Now, when it comes to the lanes of investing, for me, actively, primary trend is going to be in small to mid cap growth stocks. Swing trades would be in more liquid large cap stocks, what we call more efficient stocks. So we've got inefficient small to mid cap, low float sort of stocks, and we've got more efficient large caps, what tend to be medium higher float stocks. So I'll just basically go through this real basic stuff again. You've got actually a reverse vol base here. So what do we say about the reverse vol base? Well, it's quite a big ask for it to break out after trading. It's a 30% move just to break out. So on a reverse vol base, I'm more likely to look at the pullback, even if it is going to be put in a trend lane. Now, let's just go through the motions. Let's tick the boxes with Gore. Is Gore a growth stock? It used to be. Is it a growth stock now? No. It's pretty lethargic on the growth scale, isn't it? Forward year on year, earnings per share 9%, profit 13%, turnover 6%. That's pretty lethargic. That is sloth-like when looking for growth stocks. Is it an inefficient sort of low float sort of small to mid cap? No, it's large cap stock now and it's a medium float. So does it tick the characteristics where you're going to find more trends? No, it doesn't. More primary trends. Well, what about the swing characteristics? Does it? Yes, it's a large cap medium float. Is it liquid enough? Yes, it is liquid enough. Where do we look at swing trade stocks from? Well, we tend to look from the pullback to mean trend, and we tend to target. I take the log scale off here. We tend to target that, that move we measure at trading basis. Back to highs is high probability, and we have our own measured move, what we go to. And what does it do? Well, it does that straight away. What is the best pullback to take? Well, the first pullback's the best pullback to take, isn't it? What about the second pullback? Well, it's not going to be as good as the first pullback, after a base breakout. Consistency is going to be, the more second pullbacks you take, the lower your success rate will be. But this one works out fine again. It pulls in again and then off it goes again, and it goes on a little bit of a trending run. So what do we learn from this? Well, there's no big red flags in this stock until the breakdown here. And the trouble with the stock isn't high growth is if some kind of sort of miss hits the tape, it's going to be instant sort of, it's going to have a pretty hard sell down, isn't it? Because if it was fantastic growth and it was going to be sort of a little bit soft or in line, it could still come in, retain its primary trend, and then the market will start looking forward again. But with something what hasn't got solid forward numbers, an inline or a soft result, any kind of warning in there, you can get a little bit of a warning in a high growth stock, and it just basically being one day's noise. This has been smashed, hasn't it? And it's broken trend. So the trend for my longer term style has actually turned short, but it might just be a dip into that level. just throw it out there to all the trolls. Every time I mention Gore, they jump on everything and they get all defensive. The way we come at stocks and the way we sort of, we I always say we hate them all evenly. It doesn't matter what name is on the stock. I will do the same analysis week in, week out, and for this stock, it's broken trend. But for the lane we put it in at trading basis, we put it in a swing lane and not a trend lane. From the prior moves it had, it was firmly trend lane stock. But as with the likes of stocks like Boo as well, we did exactly the same with that. It is not the it wasn't. This was a growth stock. This was efficient, larger cap stock, and we're not beating up on people and we call them the Boo disciples and the Gore disciples. We're not trading on rear view opinions or rear view figures. We're always looking forward with an open mind, and when we punch these into my screening method, it will say large cap efficient, and then it might get absolutely smashed and let's Boo in to have a quick look, and it might turn, Boo's looks like a mid cap high float now. It's got no growth, so year on year anyway. And you could do the same with Fever Tree. So the lesson here is, don't be sort of fixated with past returns and past opinions, and as soon as you go through that full year report, that it's a completely different earnings year, and it's a completely different playing field. So small to mid cap inefficient growth trend, and then it just basically, they always get overheated, and it just turns into an efficient larger, and I'll just put this one in my own screener as well. This is what you end up looking at, mid cap high flow efficient trading stock. It says study price action here because it's a mid cap. If it was a large cap, it will say swing. If it's a small cap, it would say trend. But yeah, it's just not in play anymore for anyone who wants to trade for price accumulation. And this is basically price accumulation is capturing a trend as well. So real basic stuff, this fundamental investors, and technical. I'm fundo technical, and I'm growth, biased towards growth in inefficient stocks. So yeah, Gore, it's an avoid from me, as with Boo, as with Fever Tree. It's an avoid from me. And we'll just go to have a look at another stock what basically went the same way. Avon, it's an avoid from me. So yeah, no need to hate. It just is what it is. That's what the data tells us. Okay.